Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with a follow-up interview with one of my favorites, Gregory Feller. Gregory, what is your position over there at MOGO? I know you're
president.
You're the president. Your brother's the CEO, right?
Yeah.
Okay.
Yeah, twin brother.
Yeah. So, Gregory, it's been a would you say it's been a tumultuous, hard, tough road the last couple of years, maybe?
Yeah, I mean, look, the entire, obviously, tech sector has re-rated. Obviously, we've gone from a zero rate environment to, the fastest kind of rate increase I think the market's ever seen. So it has completely changed the overall financial markets and therefore changed the decisions that companies like MOGO has to make in terms of where we're investing our dollars. How we our appetite or investors' appetite for losses, and so we've made a lot of tough decisions to basically get ahead of that. We started in at the end of Q1 of 22 aggressively on reducing our cost base, and I think we got ahead of most. I mean, in the last kind of 4 quarters, we brought our cost base down almost 40%. We hit, we were negative 5 million of EBITDA in Q1 of 22. We said we'd be positive EBITDA by Q4 of 23. We actually hit that in Q4 of 22. So we're positive EBITDA last quarter. We haven't reported Q1 yet. And then we came out and said that we expect we're targeting a 2.5 to 3.5 million of EBITDA by Q4 of this year, which would be a $10 to $14 million EBITDA run rate. And we think that it's that discipline on the cost, focus on profitability, that is going to kind of demonstrate to the market that we have the ability to weather this storm. And our view is we're not going to be. We need to operate as if there's no access to outside capital. We ended the year with 30 million Canadian of cash in our balance sheet, another 12.5 million of investments, plus a sizable stake in the only regulated crypto exchange in Canada. So we've got one of the strongest balance sheets we've ever had. Now we're positive EBITDA, and we're focused on growing that EBITDA over the next 3 quarters or the next 4 quarters. And then we've got a lot of exciting growth opportunities with our MOGO Trade product in Canada as well, in our digital payments business.
So, I'm gonna go backwards for a second, because when the market really started to roll over, I mean, you've been in a weird spot, right? Because I think for a long time people viewed you just as a crypto play, and then but when the cryptos kind of went crazy, you didn't really participate in that because people were looking at you as a financial. Yeah, you've just been in a weird place, right? So, but I recall it was probably what, maybe I don't know when you did that raise, but we talked, and
December 21.
And it was a very smart time to raise. And I know you took a lot of heat from investors, but I just want to point out to everybody that had you not done that raise then, this could be a very, very different conversation today, right?
Yeah.
Because if you have to raise capital as a small microcap company, good luck.
Right.
I mean, not just good luck. If you do manage to do it, it's going to be so toxic to your shareholders,
right,
that you're going to wish that you would have done a raise in September 21.
Yeah.
Right?
Yeah, no, I think that's right. I think, what I always say is, being in this seat, you've got to make decisions that you believe are the right decision long term for the company, which may not always be popular with investors. And hopefully, in hindsight, those investors realize that. And I think that raise was a great example. At the time, a lot of people didn't like it, but in hindsight, everybody's like, okay, that was a smart move. But that really made sure we had a balance sheet to weather a downturn. The other decision we made, as I said, we got out early on cost cutting, because a lot of companies maybe raise a lot of money, but they just were burning through it too quickly. And then they get down to a level that's, effectively not enough cushion. And so I think, that is one of the unique things about us. We are a small cap, but, we've actually been around for 20 years. So we weathered through the global financial crisis, right? We're one of the only fintechs out there, I think, that's been around that long. So we are survivors. My brother and I collectively own just under 10% of the stock. We've never sold a single share. So we're making decisions as it relates to our capital structure, whether it's capital raises or managing the cash, as we would alongside of any equity holder, that we don't want to make a stupid decision. And I think if you look, our record speaks for itself. We haven't made a stupid financing decision. We've never done anything to hurt the capital structure. And that's because, we've been operating this a long time, and we are, large shareholders and have an interest aligned with the, with our broader shareholder base as well. So we think that puts us in a unique position. By the way, as I said, we're targeting to get to 2.5 to 3.5 million EBITDA by Q4. Right now, if you look back to Q2 of 2020, when COVID hit, we were able to generate 5 million of EBITDA on 10 million of revenue. We generated 17 million of revenue last quarter. So we have high confidence in our ability to get to that 2.5 to 3.5 million on a much higher revenue base than we got to 5 million of EBITDA in the past. So we think we've already demonstrated it before. And on top of that, we are still investing for growth, right? We've got a lot of exciting opportunities with MOGO Trade. MOGO Trade, Canada, very different than the US from a banking perspective, dominated by 4 or 5 banks. They're still charging high fees. So that creates a big opportunity for disruptors. And now in this market, in a way, the good news is that there's not, in the past, it was easy to raise money. There were a whole bunch of competitors sprouting up and trying to compete with us. And now most of those guys are going away because they don't have the scale. They never had a profitable model in the first place. And they're not going to be able to raise capital. And so that's going to limit the competition. It's a regulated market in Canada, which we think we're really one of the two largest fintechs in the Canadian market. And then, as I say, we've got this, crypto option with, we had a stake in the largest or the only fully regulated crypto company in Canada. We've now announced that that's merging with two other crypto companies. So that's going to ultimately, when that closes, that'll be turned into a stake.
So what does the merger look like exactly, Greg? I mean, what does that mean for MOGO shareholders? Does it mean anything?
So say that again, Tim.
So what is the merger of what you were just talking about?
Sure.
What is that? Does that have any impact on the MOGO shareholders? I mean,
yeah, absolutely. So basically, we've taken three Canadian crypto exchanges, WonderFi, CoinSmart. Both of those were smaller public crypto companies. CoinSquare, which is what we owned a third of, which was private, and the only fully regulated exchange in Canada. We've announced that all three are coming together. What does that do? So first of all, you're bringing three companies together. They're going to have 1.6 million users in Canada. They're going to have revenue scale that we believe that business will be at least break even. I mean, Coin's base isn't even break even. And it'll be the only fully regulated crypto exchange in Canada, or for that matter, North America. No debt on the balance sheet and about 50 million of cash and investment. So a well-capitalized balance sheet. So effective, we believe it becomes the de facto leader in Canada. And by the way, I think the only public fully regulated crypto exchange in North America, if not the world. And we, MOGO shareholders, by default, will be the largest shareholders in that company. Why? Because we're exchanging our stake for, we're going to have about 85 million shares in the NewCo once it closes. We have only 75 million shares outstanding at MOGO, which means every share of MOGO underlying it will be at least one share of this company. And I don't think that value is anywhere in our share price. I don't even think our core MOGO business is close to being valued properly in our current share price. So my view is investors are getting a free option, if you will, on crypto. And quite frankly, the biggest risk of crypto right now in the US is regulation. But by, through this investment, you're even taking that regulatory risk off the table, because this business is a fully regulated crypto exchange in Canada. So I think that's a really unique opportunity. And MOGO's core business has zero exposure to crypto. There is 0% of our current revenue at MOGO is crypto related. So think of MOGO as a fintech, with a large stake in a crypto company, but actually from an operation perspective and the core MOGO perspective, really there's no crypto exposure. So I think that is a really unique opportunity. We still believe in crypto. We think we're going to have a big opportunity to monetize that longer term once that deal closes. And in the meantime, we think we've got a massive opportunity with MOGO in Canada, multi-billion-dollar opportunity. There's still 2 trillion of assets sitting in mutual funds in Canada paying 2% fees. Massive opportunity for us to disrupt that sector with our digital wealth products. And we have about 2 million users in Canada. We're generating about $35 of ARPU off those users today. The banks in Canada generate over $1,000 of ARPU off of their users. So massive TAM there for us, above and beyond whatever the crypto exposure is we have through this deal.
So I'm talking to a guy that sounds very I don't know. I want to say you sound pretty confident, Greg.
Yeah, I mean, we are. I mean, by the way, we bought back shares and we've been buying back our stock, bought back stock last quarter. So, I mean, look, we have been hurt by the overall valuation changes in the market, and we've been hurt by, I think the narrative of MOGO being a crypto company. But if you look at these other fintechs that saw the revenue drop 50 to 80% from peak levels, our revenue was actually up in 2022 by about 20%. And now we got EBITDA positive a year ahead of schedule, and we've got a strong balance sheet. So I feel very good about the position we're in. At what point in time the market realized that, that's obviously something that we don't control. All we can control is execution. That's what we're focused on. We're heads down on execution. And our plan is to grow EBITDA every quarter this year. So we're laser focused on that. And as I say, significantly growing it by the end of the year. I think if we do execute on that plan, then I think, it'll start to be reflected in for shareholders.
So, if you think about, and you and I kind of talked about this before we hopped on the call at the recording, but for companies that, especially small and micro cap companies that have not just been through a pandemic and the largest interest rate hike cycle in history, right? Most rapid interest rate hike cycle ever. Very supply chain issues that were unbelievable, right? Lots and lots of challenges. And any company that has managed to not just survive, but to actually thrive, to grow.
Yeah.
Those are the kind of companies that I want to pay very close attention to, right? Because when things normalize, and I do believe that good times will be here again. I truly believe that, unless it's the end of the world.
It's not if, it's just when, right? It's just a matter of the timing, right? This too shall pass.
This too shall pass. Exactly. So when those times come back, would you not want to know and be positioned with the companies that were able to thrive in that environment?
Right.
That's what this time is all about, is identifying who those companies are, right? So that when the turn comes, and I think when the turn comes, it's going to be violent and vicious. I really believe that. I believe because there are so many companies that are ridiculously, stupidly priced right now. But what they've accomplished, they have not been rewarded by Wall Street at all, right?
Yeah.
And now you have a whole retail base, and you probably know this because of your new MOGO trade. But the retail investors packed up their ball and gone home, right? They're done for right now, because they gotta wait until they can until they get FOMO, right? Fear of missing out. Right now they're not fear of missing out on anything, right? They're like, when will this end, please? Right? So that's where we're at. So I do have a question for you though. Have you gotten the NASDAQ letter yet?
Well, we did get the NASDAQ letter in October of last year, which gives us an initial 6 months, which basically is coming up shortly. But as you probably know, with NASDAQ, there's
extension.
You can extend that for another 6 months. And so our view is we will take care of that. And I think look, I mean, I believe that on a personal level, that not only is getting EBITDA positive the right thing to do in this market, but ultimately, as we demonstrate that, I think that will allow investors to put some base level of EBITDA multiple on this business, totally separate, by the way, from kind of the exposure that they're going to get on the crypto side once this deal closes. So I think if we do the right things and continue to execute, I think we'll be able to manage through the NASDAQ listing, and we're committed to staying on NASDAQ. As you know, we're also listed on TSX, but I think we're committed to staying on NASDAQ as well.
Right. So, I mean, just in case anybody doesn't know, all that needs to happen, at least, you're just priced right now. Price is the issue, right? You meet all the other requirements.
Yeah. So you basically have to go over $1 US for like 10 days and
10 days.
Start the clock. You start the clock.
10 consecutive days.
Yeah.
Over one.
Yeah.
And then, as long as that happens, the clock resets.
Right.
Right.
Yeah. Exactly.
Okay. So, and with everything that you've got going on, let's just talk about again what you've guided for. And in very simplistic terms, let everybody. So essentially what you're saying to the market and to the world is listen, we're going to be able to weather the storm. We're not going to have to raise capital.
Yep.
Right?
Yep.
And if that's the case, then you're probably trading at a very, 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 very deep valuation type number in my mind, right?
Yep.
And if you execute the way you've been executing, I think you're going to do what you say you're going to do, right? Then, let's say the economy does not go into this massive recession that everyone seems to know that we are going into. I don't happen to believe that. I happen to think that we have been through the worst. And the companies that, are there going to be companies that go away? Sure. Are there companies that deserve to go away? Yeah, there are. Well, this is a cleansing, is what this is, right?
100%.
And there's probably still more pain in certain areas that's coming. That's okay. Yeah. It's about identifying the guys that are going to be here when it's all said and done.
Yeah.
Right.
Agreed.
And I believe MOGO is going to be one of those companies.
Yeah. As I say, we managed through 20 years. We managed through the global financial crisis. So, I was a banker at Goldman in Silicon Valley during the .com days. So I've kind of seen all these bubbles and these contractions. So, I think we've got a pretty seasoned team here that knows how to manage through these periods. And so, in fact, in a way, the positive of this period is it's forcing a level of discipline on companies that they haven't had to have. And those companies that embrace it, actually, I think could take their execution game to the next level. And that's what we've seen at MOGO. We've made dramatic cuts in the business, but we've actually increased our productivity of the team on with fewer people by driving this performance-based culture in a moment in time where you can. Because remember, when things were hot, it was hard to even drive a performance-based culture because if people could walk across the street for twice the pay, if people kind of felt like they were being pressured too hard. And now, that's not happening, right? I mean, every tech company out there has been going through, rounds of layoff, which means that I think we're in a position to attract higher level talent than we've seen in the past. B, make sure that everybody is operating at a high level. Because there's everybody wants a job right now. Plus, they see the massive opportunity we have at MOGO. And I think that combination has gotten our team now more excited, I would say now, almost than they've ever been in terms of the opportunity ahead of us and the things that we're executing on and delivering results on. And we expect to continue to do that, throughout the rest of this year.
Yeah, and I think that sounds like a good plan. Right? Good strategy. I mean, Greg, I've liked you from day one. The first time we met, talked, you're a very, very bright guy. I mean, you have worked on Wall Street, you know the game, right? And this is a cycle that we were going through. Let me ask you a question though, because you did say you were through .com, you went through 2008, right?
Yeah.
How does this one feel to you?
Mm-hmm.
This cleansing, how does this feel to you than the other previous ones?
It doesn't it doesn't feel well. I mean, the .com one was very much a technology driven one, and it lasted longer than people remember. I mean that the recovery was a good solid three years before things started to turn around. I think things are moving much faster today than they were back then. So I don't think we're going to be in a 3-year kind of a down market. I think things are just moving at such a faster pace now. And by the way, there's a whole bunch of things going on. I mean, AI is going to make changes to every industry, including our industry. And so there's a lot of innovation that's happening right now that I think is going to drive excitement back into the tech sector again. I think you then level on sort of this operational discipline that a lot of tech companies are bringing to the table, and I know MOGO is, that can drive basically ultimately higher performance. By the way, AI is going to allow us to drive higher performance. The global financial crisis to me was definitely a scarier moment. With what truly did seem like the entire financial system was teetering. And although we've had some banking failures in the U.S., it doesn't feel like the U.S.
It's nothing like 2008, right?
No, it just is not at that level. And I think, as I say, we've got a lot of other exciting things going on in the background, and it's moving quickly. AI is moving really quickly. Like, companies are literally changing their model from like 2 months ago, and we're hearing stories about companies able to cut a third of their workforce, because of the benefits of AI. And that is going to allow, I think, companies like MOGO to disrupt big players that nobody thought were disruptible. So it's about surviving and making sure you get through the other end so you can take advantage of the opportunity ahead of you. And that's what we're telling our team. If you look at the global financial crisis, the firms that made it through made more money than they ever made before, right? They all looked like they were going out of business, but the ones that survived then quickly came back. And by the way, they came back faster than anybody thought, right? I mean, it happened really quickly. So as bad as it seems right now, things can turn around very quickly on a dime. Retail investors will come back very quickly on a dime. And so we just want to make sure that we're prepared for that ourselves. And by the way, from a product perspective too, because MOGO Trade and our whole digital wealth product is geared to that retail investor in Canada, the lowest cost, we believe the best value prop out there. We don't think anybody that has the ability right now can match us in terms of pricing, because we're going in there with really kind of, no existing business to disrupt, but effectively just disrupt the existing players. So we think we've got a really unique opportunity there as well. So we're, super excited about, the opportunity, and quite frankly, coming out of this with a lot fewer competitors versus, there were literally hundreds of fintechs in Canada that we were dealing with, and they all could raise money and they all spent money on marketing, and that actually, drove up costs for us and any other player. And most of those guys are not going to be around.
And that's the cleansing, right?
Yeah,
that's
exactly.
the cleansing.
Yeah.
So, that's where you find the differentiators and the good operators and those that say that do what they say they're gonna do, right?
Yeah, exactly.
So, I know MOGO's not a household name in the U.S., but MOGO is a name I think that people should put on their radar, right? I think that there's not a whole lot of downside. If you look at risk reward scenarios, this is a pretty.
We are trading pretty close to the lows we saw in COVID, and that's when we had less than 10 million of cash investments on our balance sheet, 10 million of revenue a quarter. We're so far ahead of where we were back then, in terms of our business, in terms of our balance sheet. Look, we're obviously bullish. MOGO's been buying back our stock ourselves, and I've been personally buying stock.
And you've never sold a single share.
Never sold a single share, and our stock, as you know, has been as high as over $15 Canadian. So, and we were trading millions of shares a day. So we had opportunities, but we believe there is a multi-billion-dollar opportunity for MOGO to be one of the winners in Canada.
What is the mission of MOGO, Greg? What is the mission? What is the core mission of MOGO?
Yeah, so we basically want to help Canadians get in control of their finances. 50% of Canadians don't have a retirement account, so effectively are not set up for financial freedom. And the reason we believe is nobody's made it easy for them or made it cost effective for them. The banks have been focused on making a lot of money for themselves. Canadian banks are the most profitable banks in the world, the highest ROE, okay, because they're charging high fees. As I say, there's 2 trillion of mutual funds in Canada paying 2% management fees still. And worse than that, actually, is that the performance of those mutual funds for over 90% of them isn't even close to what the indexes are performing at. So the consumer loses both ways. So our goal is to give Canadians the cheapest, most effective, and sustainable way to invest, make it super easy to be on a path to retirement, very low fees. And ultimately, in the long run, we believe that low cost model is going to be the winning model.
And I think you're right. So, I mean, MOGO Trade, I think you should go check it out if you're in Canada, right?
Yeah.
Check out MOGO Trade, and you know, even though it may be difficult to be in the market right now, I can tell you that this is when you look for those hidden gems, man, because when the market turns, and you said it yourself, each time we come back way quicker than people think we're going to come back, right?
Yeah.
When negativity and pessimism is just everywhere, it's difficult to see that. But I can promise you, because I was through the dot-com bubble, I was through 2008. I've been through a bunch of these things.
Yeah.
When it comes back, it seems like to me, it gets more vicious and rip your face off short, you know, rallies, but they're not just a short squeeze for a temporary time. It's the turn, right? And then it just keeps going. And then, you know, 6 months later, you're going, damn it, why didn't I buy in? Right?
Well, as Warren Buffett says, right? Be fearful when others are greedy, and be greedy when others are fearful, right?
Exactly.
And so yeah, agreed. I mean, again, we can't control the overall markets, but as I say, this too shall pass, and eventually fundamentals drive stocks. So if we're focused on the fundamental side of it, eventually, you know, we think the stock side of it will follow.
And I agree. Gregory, I want to thank you so much. Is there anything that you want to sum up? Anything you feel as though you missed?
No, I think we've covered it all, Tim. No, I appreciate having me on again.
Okay. Gregory Feller, I want to thank you for coming in. I know you guys are going to be here. We're going to do this again. And I think over time, it's just going to get better each time we talk. It hasn't been a lot of fun, the ones we've done, but that's going to turn, and we're going to be having a great time. That's coming, right? And I'm looking forward to those times.
Yeah. Me too.
If you're not watching MOGO, put it on your list. I think it's technically, I'm looking at the chart, and it's in a very interesting place. Just going back to, what is that, 2020, kind of in an area of support here. I don't see a whole lot of downside. You look at risk reward, this thing has been as high as $12 US.
Yeah.
You know, let's see, you could lose what, 60 cents, you could gain a few bucks. I mean, that's a pretty good risk reward. And you have an option. You have an option on crypto, even if you don't know anything about crypto. You actually have an option that is 1-for-1, which is pretty incredible. Actually. Yeah. So definitely one I think to keep an eye on. And if anybody has questions for you, Greg, can they reach out to your investor relations department?
Absolutely.
Okay. All right. Good deal.
Awesome.
All right.
Thank you.
I'm going to turn this off. Hold on 1 second, Greg.
Okay.
Thanks for tuning in to Alpha Wolf Trading and listening to this interview with Gregory Feller from MOGO Inc. Ticker symbol MOGO. I hope you enjoyed today's interview. And if you did, do us a favor. Give us a like. How about giving us a share? And while you're at it, why not give us a follow? Till next time, stay safe. Alpha Wolf Trading wishes you the very best of success.